Welcome back. You're watching Buy Now, Sell Now on ET Now, a show where we get you answers for all of your stock-related queries. Remember, viewers, you can connect to us live on the WhatsApp number that's flashing on your screen. And do remember, each time you write to us, mention your name, the stock that you're looking to invest in, mention that name as well, along with the buy price, the quantity, and the time horizon in case you've already purchased the stock. In that way, our experts will be able to help you better. Talking about our experts, today's techie special on Buy Now, Sell Now. So we have Kunal Bothra as well as Osho Krishan joining us on the show. Very good morning, gentlemen. Thank you so much for joining us on ET Now. And let's kickstart taking all of the stock-related queries. This one is coming from Vinay. He's writing to us from Bangalore. He wants a view on Bajaj Auto as well as Bajaj Finserv. He's saying that he's invested about 1 lakh or so. I don't know, 1 lakh each or cumulatively 1 lakh in both of these counters. So Kunal, what's your view on Bajaj Auto as well as Bajaj Finserv? How are they looking to you on the charts?
Stay invested into these stocks. Of course, these are quality names, time tested over the last many years and many decades of their price performance. Maybe I think it's a bit of a rough patch for both of these stocks. Auto stocks have gone through a correction. Bajaj Auto has been underperforming in that sense. And same is the case with Bajaj Finserv. I think Bajaj Finserv Finance, both of these stocks have underperformed. But then I think it's just a phase where these stocks, they tend to underperform. We look at the longer term chart structure, they're still very much positive for these names. If you're a long-term investor, then I would probably believe that you should continue to stay put.
All right, so that's the take coming in on both of these counters. Let's take the next query then. And the next query that I have is coming in from Vignesh. He wants to know about Canara Bank. He's holding about 1,020 shares of Canara Bank in his portfolio at a price of 109 rupees per share. Osho, he's looking for a short-term target on this one. And also, can he hold this for the shorter term?
Firstly, very good morning to both of you. Well, now coming to the query on Canara Bank, then this counter has now even given a very strong positive traction in the last 2 to 3 trading session and has negated the formation of lower highs in the recent period. So I expect the kind of a formation that it has made in the last couple of months, there is a possibility of this counter testing the zone of nearly 115 to 118 in a very short-term time frame. So I am expecting that from here onwards, there is a room of approximately 8 to 10 point kind of a movement in the short-term perspective. So one can definitely stay invested in this counter with a stop loss of 102 from short-term time view.
Osho, let me come back to you. By any chance, will you be able to give a call on Swiggy at current market price? Do you think that Bharadwaj can go ahead and buy this one?
See again, from the technical aspect, there is no data that will be very suffice for giving a view on Swiggy. But looking at the overall movement in both the counters like Zomato and Swiggy, both the counters are looking very positive. Zomato yesterday has given a very strong breakout, and looking at the overall fundamental developments in Zomato and Swiggy, I am expecting that there can be a decent upsurge in the coming period. So one should stay invested with their positions in both the counters. Both counters have potential to surge from short to medium term time frame.
Kunal, coming to you then, this one is coming from Ghosh Dada and this is on the overall markets. He wants to know your view, whether he should go ahead and book profits now and wait for some sort of a semblance in the market to go ahead and buy again is what he's asking.
Yeah, it could be a good strategy because I think the markets now lack any kind of a major trigger, and we generally say that the indices, they generally tend to build up a sort of a trend before the event. Post the trend, the index generally gets into a consolidation or maybe some sort of a mild correction. So maybe I think in that sense you may consider to book out profits over here and look to buy back in case if there is any kind of a mild dip or a correction on the index.
All right, so that's the take coming on overall market. What sort of a strategy you can do actually, Ghosh Dada. This one is coming from OSN Reddy, writing to us from Hyderabad. He has Allcargo logistics in his portfolio, show about 1,200 shares at a price. Oh, so he's not given a price, but he's mentioned the fact that he's at a loss of about 18%. What should he do? Should he look to average or exit out of this one?
See, overall, this counter is not performing at all. The counter has been making the side and has been making the formation of lower lows, lower highs in the all time frame chart. So I'm expecting that there is a very kind of a very subdued movement that can be expected in this counter. But on a positive side, definitely this counter has a limitation on the downside because the kind of formation it has seen in the last 2 to 3 trading weeks, there is an attempt of having a reversal. So I would suggest that for a last sake, one can definitely keep a stop loss of 51.80 and keep holding the position until we see a surge towards the zone of 60 to 62 in short-term time frame.
Let's take this next query then, and this one is coming from Vidya. Wants to know about Titan, Kunal. 40 shares of Titan at an average price of 3,315 rupees per share. She is in a very healthy set of profits, is what she's saying, or rather decent set of profits. Is it the right time to book out profits, or what sort of a strategy she should have for this one?
See, it's a difficult one, frankly, because the stock is on the verge of a breakout of its 200 DMA. If this breakout sustains, then there could be a possibility of another 100 to 150 point jump into the stock price in a very short span of time. And the good part is that the volumes in the last 5-6 days of this consistent price uptrend has been a lot more better for Titan, which means that there could be a chance that the stock may move up higher. But in case if it fails to do it, and if the stock doesn't cross over and close above the 200-day moving average, say for 2 or 3 days on a consecutive basis, then there could be chance of a reversal. So it's a very tough situation over here since you are a short-term trader. I would probably believe that keep today's low as a stop loss or a trading stop loss for this trade in case of the stock, because in the last 5-6 days of this up move, the stock has not breached below its previous day low. So I think if the pattern repeats for Titan, then you may expect that 150 point further up move into the stock price. If not, then I think it's a good time where you may look to trail your stop losses and book out profits on the stock.
Alright, so that's the take coming in on Titan. But on that note, we slip into a break on this edition of Buy Now Sell Now. When we come back, we'll continue taking your query. Viewers, don't go anywhere.
Welcome back to Buy Now Sell Now. Let's keep it going with all your stock related queries then. And the next query that I have is coming in from Shri. And Kunal, let me take it from you because he specifically wants your advice on Ambit Enterprises as well as Dixon Technologies. What are the short-term targets for both of these names? He didn't share his buy price on these names, but how is the technical setup looking like?
So looks attractive for both of the stocks. Dixon specifically, I think, is one of the better names, at least in the recent charts, recent history, where the stock has moved up higher from 12,000, 12,500 in the month of I think August, September, towards 17,300, 400 levels where it's trading right now, consistently moving above its key moving averages, 50 DMA, acting as a support. Now, if this trend sustains for Dixon Tech, then potentially you could be looking at say at least another 700 to 800 points rally for the stock price, which means say closer to 18,000 could be a decent target for Dixon over the near to medium term. But for Ambit Enterprises, the stock has come back towards its 50-day moving average. It's gone through a very mild corrective wave. I think looking at the correction so far, maybe there could be a possibility that the stock may retest levels of 5,500 mark. That could be a better point where you may look to even average out in case if your buy price is on the higher side. And on the upside, I would look out for 6,500 as a potential target range for Amber.
Alright, so that's about Amber Enterprises as well as Dixon Tech. The next query is coming in from Venu, who is a senior citizen from Chennai. And Osho, he's been holding HUL for the last 3 months. He has about 50 shares at a price of 2,950 rupees per share. He's asking you, when will the stock actually surpass 3,000 rupees per share mark?
See, again, that's a very a reasonable question, that when HUL can cross the zone of 3,000, but because overall this counter belongs from a very heavyweight counter, so I expect that there can be a gradual up move. This counter basically represents the FMCG index, so I expect that there can be a gradual movement that can be seen in HUL. Overall, we have seen a breakout in this counter around the zone of 2,600 on a weekly and monthly time frame perspective. But in the last 3 months, there has been this counter has been into a very strong corrective phase also. So I expect that in the coming period, there is a possibility of a revival in this counter. Again, in short term, 2,600 should be the immediate target. And the time it breaches the zone of 2,600, then we can definitely see a higher target of 29,50 in the short to medium term time frame. So overall, one needs to be very patient with HUL. It's not very aggressive, and there won't be any strong movement that can be seen in HUL every day. So one needs to hold this counter for a longer duration to have a decent returns over a period of time.
All right, that's the take coming in on HUL. But Osho, let me come back to you then to have your take on Motilal Oswal Financial Services, wherein Sam from Bangalore has bought 800 shares and his buy price is 760 rupees. He's been sitting at good profits in this one, but what's your take? Good time to book out profits or continue to hold on? He can stay invested for the next 1 year.
See, overall, the technical structure is very positive for this counter. This counter has kept being in a very strong cycle of higher highs, higher lows, taking support from 50-day exponential moving average on the daily time frame. So overall, the structure is very good. The position is already made at a very lower level. So I would expect to hold this counter for a longer duration because there is no sign of respite or correction in the coming period. Overall, equity markets are expected to perform well, and so do the stock prices of these companies. So I expect that there can be a strong continuity in the coming future, and one can stay invested for a longer duration for a higher return.
All right, Kunal, coming to you. This one is coming from Sana, who's writing to us for the first time. She's writing to us from Hyderabad. She wants to know about RVNL, IRFC, and BHEL. All of these counters, she's holding about 5,000 shares each, and she's already in sitting on over 100% profit in all three of them. She wants to know now, should she go ahead and trim her holding or book out total profits and buy CDSL, Tata Tech, and Geo Financial?
So a difficult one, frankly, because I believe, for one, that the names which you mentioned on the PSU side, RVNL, BHL, etc. I think these stocks, they still hold potential for major upside over the next 2 to 3 years. So I think a major part of the correction seems to have happened for these stocks in the last 2 quarters. I think around 30% to 40% broadly is the correction for these stocks from their recent highs. So which means that a major part of the correction is now over. We could be looking at the stocks coming back into their own groove as well as a strong uptrending mode. So I think in that sense, I would suggest to hold on to these names if you can hold on to these stocks for at least another couple of years. But then from the other pack, I think Geo Finance is something which has started to look very attractive. That's a chart which I believe is also looking quite strong and heading towards a big breakout for itself. So if you have additional capital, then I would probably suggest to deploy into these names. But I think other than that, I would suggest to hold on to the existing stocks which you have on RVNL, BHL, etc.
All right, moving on then, and Kunal, once again coming back to you, this query is coming in on M&M Financials, wherein Shankar from Chennai wants to know that he's already holding 20 shares, what to do with those counters. M&M Financial is the stock and his buy price is 300 rupees. Can he hold or exit?
I think you should hold on to the stock because in the recent recovery, the stock has recovered quite well. From 250 to almost 290 was the high M&M Finance has made a couple of days back. So I think it's retesting its 200 moving average. A potential second retest of its 200 DMA. I think the stock should be able to surpass those levels of 290 and come back to the 300 plus mark for itself. So I think I would suggest a hold on M&M Finance, and if possible, then closer to 270-75 levels is where you can look to even average, so that you can bring your cost price down from 330 levels to just around the 300 odd mark.
All right, the next query is coming from Sagar. This query is for you, Osho, specifically. He's saying he shorted Tata Motors around the 1080 levels. Do you see another leg of correction in the stock, or you feel the stock is bottomed out for now?
See, firstly, very congratulations for shorting Tata Motors at these levels, and from there onwards, we have seen a very decisive correction. Overall, now the counter is into a very strong consolidation zone, so I expect that in the coming period, there can be a revival in this counter, although conviction will lie once it crosses the zone of 820 on a decisive manner. So from there onwards, we can see a revival in this counter. Currently, it is in no trade zone. It has been into a very strong consolidation, and I am expecting that this can be seen as a base formation for this counter. So approximately 770 and 790, 800 zone is a very strong consolidation for Tata Motors. The time it moves beyond 820, then one can even look for accumulating this counter for immediate target of nearly 940 to 950 in short-term perspective.
All right, that's the take coming in on Tata Motors. But with this, viewers, it's now time to slip into a very short break. Don't go anywhere. We'll be right back. Welcome back to Buy Now Sell Now. Let's keep it going with all your stock related queries. Then, and the next query is on Indus Towers, the stock which has been in the news. And Kunal, Sridhar has actually bought call options of this one. 360 strike price, and it's currently at 12. No, he bought the share, he bought the call option at 12 and it's currently trading at 16. So he's at profit in this one, and indeed the stock has been doing well on the back of the news flow as well. But how is this looking technically, and what should he do with this call option?
See, you can continue to hold on to the call option for Indus Star, but my only sense is that I think the spike which had happened to the stock price on the back of news flow, I think that should abate. So maybe there could be a time decay which could trigger into the stock price over the very near term. So maybe that could result to the stock remaining a bit more stagnant, but the option price may be decaying in terms of the value. So that could be the only catch for Indus Star. So I think in that expectation or assumption, I would suggest that you keep a trailing stop loss. So if you're okay with keeping a trailing stop loss towards your cost price, that could be a better strategy for Indus Star, and hold on to the stock. In case if the stock gets into say a couple of days of sideways range, I believe that the next leg of breakout, you might expect the stock to come back towards at least 375 to 385 kind of a zone.
All right, so that's the take coming in on Indus Towers. The next one is coming in from Devdas. He's writing to us from Bilai, and he wants to know about Asian Paints, 110 shares at a price of around 3,100 rupees per share. He's been holding on to this counter since 2021. What's your take actually coming in on this, Osho? It is way below his buy price. What's your take now?
See, overall, there has been a major breakdown on the monthly time frame of Asian Paint around the zone of 2600, and from there on, there has been a continuous downfall or lower zone kind of a movement that is being seen in this counter. So, in the recent period, the chances of revival is quite low as per the technical developments that we are seeing on the technical charts. But overall, as the counter has already seen a very strong dive from the zone of 3350 to towards 2450 odd levels. So I would say that for a longer term perspective, you can definitely hold to this counter, but I will say better to keep a final stop loss of 2400 and hold this counter for short term perspective. Even if there will be any bounce towards 24, 26 and 2700 odd levels, one can look out for exiting this counter in the from a short term time of view. But overall, on a longer duration, one can definitely give a review once it crosses the zone of 2700 in a shorter to medium term coming period. So for a longer term view, one can definitely hold on once the counter is moving towards the zone of 2700.
So hold coming in on Asian Paints for the long term. But the next query, Kunal, is coming in on a banking counter, that is IOB, when Ravi Shankar has been holding the shares at a price of 58 rupees. What's the outlook and when he should plan an exit?
Continue to hold on. My belief is that many of these PSU banking names are making a strong comeback. So there could be a possibility that if the banking pack gets maybe another couple of legs of price uptrend, you might expect IOB also to come back above its 200 DMA. I'm assuming if it's a short-term query, so I think in that expectation, maybe 60 to 65 could be a better range where you may look to book out profits.
All right, this one's coming from Shankar. He's writing to us from Delhi. He's a short-term investor, but he's sitting at a loss of about 20 to 25% actually in some of the stocks. So he wants to know now is the right time to average or wait for a further downside in these counters. He has Garden Reach, Hudco, Titagar, Bank of India, as well as Bandhan Bank in his portfolio. A couple of stocks actually to talk about. But Osho, out of this, which one do you think would be the apt one to go ahead and average out? And which one do you think he should look to exit?
See, overall, some of the counters are looking very positive on the technical charts and are on the verge of giving a fresh kind of a movement in the coming period. For example, Garden Reach is looking very positive, so one can definitely try to add some positions in this counter. Hudco again has seen a decent correction, but after that there has been a decent movement in the last 2 to 3 trading weeks. So there is a major revival in majority of the stocks that has been mentioned right now. So one can definitely try to average out or even can accumulate, but the duration for holding period should be medium to long term point of view. It should not be very short term point of view that in the coming 1 to 2 months there will be a very decisive up move, because these counters have started showcasing a trend reversal. So these will take time for a decent or a very good returns in the coming period. So I would rather say from short term, one can definitely hold to this counter from medium term point of view.
That's a hold coming in on Hutco. But moving on then, and Kunal, the next query is on Z Entertainment, wherein Ranganath from Bangalore has purchased 2,500 shares, but his buy price is 140 rupees. Just wanted to know would you advise an exit at this price point, or it's in hold?
I think it's a hold, and I think after yesterday's price up move, especially when the stock managed to cross above its 200 DMA, I would believe that that could be a potential sign of a major turnaround for the stock. Now, it's going to be very slow and a gradual process for the stock to move up higher. There could be a point where the stock may stagnate, consolidate, go into a mild correction. So I'm not sure what's your time frame, But if you're looking at it as say another 1 or 2 weeks, then it's possible that the stock may just about get into a bit of a sideways range. But if you're looking at this as a 3 month, 6 month plus kind of a time horizon, then I believe that the potential could be significantly higher for Z Entertainment, because this breakout of 200 moving average has come after almost a 10 to 11 month of price correction for the stock. So it would take its own sweet time to try and come back into a very strong momentum mode. If you're okay with holding on to the stock for the next 3 to 6 months, I would suggest to do that.
All right, so that is Z Entertainment for you. Let me take the next query coming in from Raghu, writing to us from Bangalore as well. He has Sun Pharma in his portfolio, 100 shares at a price of 1,300 rupees per share. Though he wants a longer term view, saying for the next 5 years or so. But on the charts, how does this counter actually look to you, Osho?
Overall, the counter is looking very positive from a broader term point of view, and already the position is being held from the zone of 1300. So there has been a very strong development on in terms of returns also. So from a longer term point of view, yes, the counter still has a potential to reach higher targets. On short term view, I expect immediate target to be seen around 1920 to 1950, while 1720 and 1730 is a range where one can see some kind of cushioning to any kind of upcoming blips in this counter. So short term, 1950 should be the target, and for longer duration, one can definitely stay hold to the investments.
All right, but one more pharma query that we have, and Kunal, this one is specifically for you, coming in from Sunny, and he wants your view on Gland Pharma for the next 6 to 9 months and any price target that you have, because he's already holding 33 in quantity and his buy price is 1750 rupees.
See, the only expectation is that the stock should move up higher from current levels of 1800 where it's trading right now. So over the last 4 or 5 quarters, the stock has been consolidating. It's almost like a flatline move for Gland Pharma over the last 4 or 5 quarters, where it's been pivoting around the 1800 to 1850 as a range, as a pivot point, and the stock has moved towards 2000 plus levels and fallen down to almost 1500 1600 mark. But I believe that it's difficult to interpret the potential time frame, because over the last 4 quarters the stock has been consolidating. There could be a potential that the stock may consolidate for another couple of quarters before it gets back into a breakout. But that breakout has to happen for the stock price. Looking at the setup, the build up, the price correction, the slope of the indicators, etc. So the only concern is in terms of time frame. I'm not sure if the breakout would happen in the next 1 or 2 quarters, but on the upside, I think you should be looking out for targets in the range of 2500 to 3000 also.
All right. This next query that I have is coming in from Vikram. He wants to know about UTI Asset Management. He's bought about 100 shares at a price of 1,354 rupees per share. What's your take on UTI AMC actually? Osho, how is the counter looking to you on the charts?
See, overall, this counter is hovering at a very strong cycle of higher highs, and it is taking support from its short-term moving average, 50-day exponential moving average, and again it has started moving higher. So I expect that there can be a continuity to the uptrend in the ongoing period. So I expect that one can definitely stay hold to their position in the short-term frame. Near about 1370 to 1380 is the first resistance, and after the breakout above the zone of 1380, one can definitely expect another 80 to 90 point of rally in a very short term time span. So definitely a hold even for short term or even for medium to long term time frame.
That's the take on UTI AMC. But Osho, let me come back to you, because this is the stock named Eicher Motors, which has seen a bit of a consolidation recently. But a viewer named Mohan has been holding the shares from a price of 2000 rupees. His time horizon is for the next 1 year. It's more than a doubler for him right now. But what's the outlook and what should he do?
See, overall, as you mentioned, the counter is into a very strong consolidation zone, approximately 4650 on the lower end and near about 5050 on the higher end is a very strong consolidation range for the counter. So there can be a continuation within the range in the coming period, but the time we witness a breakout above the zone of 5050, then from there onwards, another 400 and 450 point of rally can be seen in this counter. So overall, the primary trend is very positive. Currently, it is hovering in a very strong consolidation, and I'm expecting that in the coming future, there is a higher possibility of having a very strong breakout. So one should definitely stay invested from medium to long-term perspective.
That's the take coming in on Eicher Motors. But with that, we're totally out of time on this edition of Buy Now Sell Now. Thank you so much, Kunal, as well as Osho, for being a part of the show, as well as resolving all of our stock-related queries. And with that, it's a goodbye from Shrishti, myself, our producers, Soma, as well as Shreyansi, and our director, Ravinder. Thank you so much for watching.
If you like this video, then like, share and subscribe to ET Now.